Good Fed day, everybody. How are you? Hello, Sinatra, Jays, Michael Schneider. Hello, Raj. Welcome back, Hugo, Alexander, Narati. How are you? I'm doing fine. So let's take a look around. The market got some good news. Evergrande made a payment. Right, I heard that. Also, I believe the House has removed the debt ceiling. Hi, Brock, DJ. Hello, Ryan. What's going on over there in
keep it down, Dale. Everyone's trying to sleep over here.
Oh yeah, I know. It's kind of like that thing. I'd like to use today and F.A.C.E for some ideas based upon, if markets rally or decline after the Fed and how we're going to react. So, I look at the NASDAQ and this could be like some type of ABC. It could be a pretty sharp rally if it got up here, but I would sell strength on on the Fed. Same scenario with S&Ps. Maybe we get to 420, figure out what equality is here. I might go with dollar weakness if that happens. But the one thing I see is, we've gotten, a couple of the worries out of the way overnight. And then if the Fed is accommodative again, which I think is the consensus, I think most people don't think he's going to announce a taper. So the surprise would be he does and says we're going to start now or next month. That would be a shock, don't you think?
Yeah, I think that the window's closing on him not announcing something. My view, as you know, has been that they want to see a couple of the jobs reports after all the support rolled off this month. And I've just put a preview in the chat room, just my thoughts on that.
Okay.
And I think there's so many different permutations. He could announce a taper that they're starting to taper again today, and that's bullish or hawkish. But then he says, well, we're only going to taper 5 billion a month. That's bearish and dovish because that takes us 3 years down the line or whatever. At the end of the day,
I think where he could go, and it would make sense, is all the mortgage-backed securities they're buying all the time because we have a housing shortage. So really, it's not necessary for the Fed to give support to the housing industry by buying that paper right now. In fact, they may be partially responsible for having, a housing shortage because of artificial rates.
Yeah, that's true.
That's true. Maybe he could do that. The metals are acting, we're $25 off the low of what I thought may be a right shoulder. So we'll see if that can hold here. I'm really not sure what to do with the dollar. I'm almost tempted to fade it after, if the dollar gets stronger, maybe goes for a stop hunt up here to fade it. But I still think there's a chance that we get this down here. And you would think that's going to be a real good test. We're all so used to a weak dollar being risk on. I think that would be the surprise if we had a weak dollar and it didn't buoy stocks, but just buoyed commodities. So it's going to be interesting to see if the dollar turns down, what really benefits from it. So those are my thoughts going into the Fed. I don't see anything if I didn't do anything Monday, Tuesday, and be covering in here, I'm not doing anything for about 5 hours or so.
Yeah, but what we do is we set ourselves up for if we are going to get moves. I look at the ranges, look at the big wider ranges. I mean, we've got big level in cable at 135, big level in Aussie dollar at 70, big level in euro dollar at 115. We've got some big levels pretty close by that if there is big news, we could possibly see that. And then that's where I'm going to get interested, because I'm going to say, right, if this news is big, you've got to break this level. And if you're looking at Aussie dollar, the 70 level, you know, you take that chart out to a weekly, something like that. You think, right, if this is big news, you've got to break that level. If you're not breaking that level, then I'm going to start fading. I'm going to start getting in long against that level. And it's big levels like that. You know, you don't want to get caught in the middle of things. You know, you're not going to be messing around in euro dollar, you know, or even, you know, Aussie dollar around 72.30, 72.60. You know, you're not going to do that over the FMC. So go a bit wide on your charts. Look at the bigger levels. Look at the stronger levels, the wider ranges. You know, 111, 108 in dollar yen, that sort of thing.
Yeah.
And you just sit there and let the noise happen. Let the power speak for all he's worth. You assess it. You give yourself time to assess it, and then you ask the question: right, based on what I know, are we gonna break these levels? And if
We're
not,
looking at 200 pip range in yen since April.
Yeah, you know,
pretty amazing. It's been confined to that kind of range. Of
all the news that's come, you know, we've had months of will they taper, won't they taper, will they taper? You know, 10-year yield has been up to 140, then down to 110, all that time, and it's a 200 pip range on dollar yen. So you've got to ask the question: has this meeting given me something that's going to break those ranges? If not, you stick to the ranges.
Yeah. Or have central banks taken the currency markets away from us?
Oh, they've bloody volatility vampires they are.
Yeah. Stelios, good morning to you.
Hello, everybody.
There he is, such a cheerful voice in the morning. What time is it there? It's like 3 in the afternoon.
3 in the afternoon, yeah.
Okay.
So
that's why you sound so cheery.
It's on his third beer, that's why.
It's almost beer o'clock, yes.
Beer o'clock. So what are you planning for today post Fed?
Well, what do I think is going to happen with the Fed? I think up until a few days ago, it was, I want to say, odds on that Powell was going to give us a guideline on tapering. It was kind of a done deal. Now it's not so clear, obviously, because of Evergrande.
Yeah, but they made a payment.
They made the payment, but still, you know, there's more payments to be made in September. Yeah. I still think that it's going to be a surprise if the Fed is basically dovish and say, look, we're discussing tapering, but we're not going to say anything yet. You know, we're not going to give any guidelines or any plans. I think that's going to be the surprise. I think the market kind of expects them to give us some kind of indication. Maybe not the most defined, plan, but, give us something. I think that's going to be the surprise. And if that happens, the dollar goes down and risk assets go up. For me, where I'm standing, I've been saying this for a while. I want to be long metals and miners and, things like that. And I have been starting to accumulate, and I'm looking for dips to get longer. So if they do surprise on the hawkish side, if we do get a dump, and if we get yields rising, I'm obviously not going to go in all guns blazing. I'm going to look at price action, but I'm going to use that as an opportunity to get a little bit more long of these. But as I said before, I think they have now the excuse to be more dovish. They shouldn't be, but I think they have the excuse. They should be. The Fed should already be tapering and talking about hiking and all that, and they're not. So that's the problem. They at the end of the day, we were talking about this in the chat room, I think yesterday, that theoretically what the markets need is risk to be repriced properly. So you need bond yields a lot higher because bond yields at 0 or junk bonds yielding 3% or 4%. It's just ridiculous. So you want risk to be priced properly, which means that rates, the Fed funds rate should be really 3-4%. But the Fed knows that if they take rates at 3-4%, equities are really not going to like it. Nothing's going to like it, basically. And they don't want to be, probably they don't want to be the ones to upset markets and to cause that. They'd rather be the next person, the next guy who's a chair or whoever. So theoretically, they should be there already, but they're not. And the more they prolong this thing and the delay, the more, whenever the correction comes, it's going to be more violent. So, I think, to summarize, I think they're going to take this opportunity and be more dovish than markets expect, which sucks, because we're gonna go back to like one-way price action grinding, and we don't want that.
All right. Well, do you think that the big down day that we had Monday was a one-day event, and that low's going to hold, and we're going to rally to new highs, or is there another wave coming?
That's going to be. I think that's going to be in the short term purely up to the Fed today. And as I said before, I think they're going to be more dovish. So I think that's going to hold. That's my view.
Okay.
I could be wrong. I've been wrong so many times in the past, but it just feels that way.
Okay. All right. Blake, are you ready to join us this morning? How are you, buddy? Maybe not. It's okay.
I think he needs a few more minutes.
Okay, cool. Steve, how are you?
Good. How have you been, Dale?
Good, buddy. So, what are you thinking here? What would you do, say, the Fed is dovish and Euro rallies? Would you go with that weakness and just buy it?
Listen, I agree with Stelios' comments. So basically, I don't think the path.
You'd better agree, man. Go on, carry on. Sorry.
Or he'll come over.
Yeah, exactly. He has threatened me that, if for some reason I disagree.
Come over to your house?
Yes, exactly. And I definitely don't want that to happen.
He'll come and piss in your fish tank.
Yeah,
exactly.
Jinx, you owe me a Coke. He goes swimming in there, right? What do you think, Steve? I mean, I know it's. Do you think that we peaked in the S&Ps for what? At least maybe 10% correction, which would take it maybe to the 200-day down here. What do you think?
Listen, this is a question that its answer depends on two factors. One, what the Fed is going to do. Two, how is the management of the Chinese situation going to progress? Now, I think that Stelios' approach having to do with the Fed is the correct one. So the chances are in favor of the Fed using, as always, any excuse to not disappoint the markets. At the same time, I think that what we're seeing in China, I've said it before, is some kind of a controlled demolition type of event, which the Chinese would not do if they were not confident that they can manage. Now, of course, being confident that you can manage something and being actually able to manage it are two different things. But I think they're rather competent in what they're doing. They also have
they managed COVID pretty well.
Yes, they also have the huge advantage of
being a police state.
Exactly, of not having problems of giving political explanations, having to be popular all the time, blah blah blah.
They don't have, Xi doesn't have to.
Yeah, so technically speaking, there is a danger for a much bigger correction here in the indices, for example, in the S&P. But I think there is a very decent chance that if today's thrust is higher from the Fed, we might have even seen the end of this correction. So I think today we're going to find out what's going to be happening for the next, I would assume,
month,
a few days to weeks. Yes.
Okay. All right.
I think one thing's for sure: if you take a position ahead of the Fed, you're taking a view on what they're going to do. You're gambling a little bit because nobody knows what they're going to do from them.
And I'm not saying.
And what I think is going to happen, I'm not saying it's the right thing for them to do. I just think this is the most likely scenario in my opinion.
And you made a good point, Stel, regarding trading. And that's what good traders do. You're going to wait and let the trade come to you. You're not going to chase it. If you get your silver levels, you're going to step in, but you're not going to go chasing anything. And that's the best advice I can give for something, a big event like today. Have your levels, let the trade come to you. Don't go chasing stuff.
Or
Good
morning, guys. How you guys doing?
Morning, Blake.
So I was running a few minutes late. I missed like the initial conversation, but one of the things that I like to do, Ryan, is think where I want to be a few days ahead of time. So, for example, if I want to be positioned short dollars, I'm going to try to do it a couple of days ahead of the event risk in certain areas, certain levels, and try to position myself that way. So like, for example, let's say I am, a euro dollar bull. Okay. Cause I think that the Fed's going to be dovish and blah, blah, blah. What I might try to do is I might try to buy the euro as close to 117 as possible a couple of days ahead of time. So, because what happens before a news event like of this magnitude, rate decisions or jobs reports, or this time, in the current market, maybe even before like a big inflation print, what happens is the market finds itself mid-range. So if you expect the market to be like, we're going to be somewhere in this middle ground ahead of like the job or the Fed today, then I'm going to try to pick up the euro dollar lower. And then by the time we get to the data, we're going to be in the middle of that range. And hopefully I have a decent position where I can move my stops up to break even and just kind of, hopefully it feeds into my, my narrative that I'm trying to trade. But that's more of an advanced, kind of topic and maybe a strategy for traders that have been doing this for a while. I don't know if you guys do that for yourself, but I try to position myself a few days ahead of time.
Yeah. And you've also got if you happen to be in trades that's running into a big event, you've got to manage that. And like you say, if you've been long at 1700 euro dollar and now it's, you've got 30 pips, 27 pips of margin, you've got to know how to manage that.
Right. And I think that's a learned process over time. And I think what newer traders find themselves doing is they find themselves in a situation where, okay, news is going to hit the wires, here today. What am I going to do with my position? Because I'm currently up, or I'm currently down. Obviously, you don't want to hold on to a losing position going into a news event, because then you got a situation where it could really be work against you. But I think as you become more advanced and actually you've been doing this for a while, you try to position yourself ahead of time based on whatever narrative you believe in. Like, I'm a mega dollar, bear. So I'm going to go ahead and I'm going to get short some dollars on any dollar rally that I see today, something like that. But anyway, let's talk a little bit about today. And I want to actually, before I talk about the Fed, and before I know you guys have had discussions, I had to, it's one of the things about being so early in the morning and sun's not even up where I live. And, as I have to sometimes handle some things around the house because I'm the only one that's awake. So I missed like the first part of today's conversation. I know you guys were talking a little bit about the Fed, but I want to go back and talk about Evergrande for a second. Did you guys mention what's happening with Evergrande?
Payment. Yeah.
Well, they're making their payment. They have another one that's due. Stelios, you had some, you had some lied about that in the chat room, right? Some headlines that you were reading too.
Yes. So yeah, they're making a payment, but they have a couple of more coming up in September. So it's, I think it's a short-term reprieve, but not out of the woods, let's say.
Yeah, and you're seeing a recovery in like some of the Chinese markets overnight. And if you go back and you think about like the GFC, like the great financial crisis, you think about the, what happened with Lehman and, all the other banks that came, had problems. Then you think about like the European debt crisis, and you think about Greece. So do you think it was a case of one institution at that moment that made the difference? Or do you think it was more of a product of the environment and what's happening, on a bigger scale? Because I look at Evergrande, I go, yeah, that's Evergrande. They're one developer, right? But isn't this more of a product of just kind of the bigger,
Yeah, Evergrande could be the fuse. Is that
House
what
of
you're saying?
cards sort of thing.
Yeah, exactly. So when I think of Evergrande and what's happening in Evergrande, I don't think of it as, oh, well, it's fixed. Everything is good now. I think it's something much bigger, and it's a product of the current environment in China. And so anyway, so do I think do I think the Evergrande news is good intraday? Sure. But do I think it's what's the end all be all and, everything's fixed and we're going to go, and I think you should, basically what I'm trying to say is I think you should be selling into some strength here. So not necessarily right now. What I'd love to see, and this is just a setup. This is a setup in the S&P. And for those of you that follow harmonic analysis, this is the way I view it, just so you guys can see. I'd so happy be a seller around the 4450 level in the S&P today.
Yeah.
So if we can get a move up to 4450, which would be basically be 161% extension of this move, 78% retracement of the last leg lower. This is what we call a Gartley pattern. I'm a seller of risk here. So how you decide to play that is, how I'm going to decide to play that is going to be completely up to, to what's happening at that time. But the way I'm probably going to do it is selling or buying dollars at that point. So whenever the S&P reaches for the 618 retracement, which is, and by the way, this is a couple of things I want to show you. It's a 78% retracement of this move, 618 retracement of the all-time highs to the recent lows. You can see it right here, 4458. If I can zoom in there a little bit, it's right there. Okay. So anywhere up here, I am a seller of risks. That means I'm going to be buying dollars against something, probably like against the Canadian or maybe against the peso. But that's how I'm hoping that we get a little bit of a boost in risk, and I'm going to sell into that. And one of the reasons why, if you look at the S&P longer term, is we've broken ascending wedge that has been in development for so long. And then we broke down, this week or on Friday. So I'm going to be selling into strength into that, underside of that trend line. But and just taking a step back, this is really more because I think a dovish Fed is just going to give us a nice setup to sell into. If the Fed remains quote unquote dovish, they're going to give us a nice little pop in risk that we could sell into strength, because like I was just saying, I think the Evergrande issue is a little bit bigger than just Evergrande as a whole. So do you guys have any thoughts about what I'm talking about? I guess I should say.
I think you're probably spot on. It's gonna take some game-changing news from the Fed to shake us out of any ranges. And as you say, if they're dovish, if we don't get anything on the taper, you may get your 4450, and I'll probably be interested in a little nibble there as well. Yeah.
I heard Steve chime in a little bit earlier. How you doing, Steve?
Good, mate. How have you been?
Good. And just so for those of you that are Forex Analytix subscribers, just going to let you guys know, Steve is not going to be around. He's got you got a couple of things you need to do. You're not going to be around for the Morning Edge webinar here in about 45 minutes.
Yeah, just today.
Just today. So this way it doesn't throw everybody off. I know everybody's going to be upset that Steve's not going to be there. So Steve, I missed your comments. What do you think? What do you think is going to happen here with the Fed?
I have no idea, but I do believe, as Stelios said, that they might take advantage of the little turmoil we have at the moment to remain very dovish and give the market a little bit of a boost, right? I think it is very likely. Now, if they fail to acknowledge at all this as a possible risk, and they keep everything else the same, I think the market might not like that. And that might be the catalyst for another leg lower. Now, technically speaking, there is also the possibility, since you showed the index before, and the possibility of creating a harmonic pattern, there is also the possibility that we're creating some kind of a triangle here. So that can also be a technical formation we break through. if we are to continue to the downside. But
yeah, and I'm looking at the dollar as being pretty constructive here. One of the charts that is really captured my attention over the last few weeks, I would say last 2 weeks, is the Aussie. The Aussie, has been pulling back. We had this nice bullish move, nice bullish channel. Then we kind of reverted back into what I thought was going to be a flag pattern. Broke below the 50% retracement, and now we're just sliding back towards the 71 cent level. And we had a conversation, or I had a conversation with Brent Donnelly of Spectrum Markets, and he's like, CFTC data is really quite one-sided, lopsided, short the Aussie. And he thinks sentiment's pretty poor here, but I've also been around long enough over the last 25 years to know that sometimes sentiment can stay extreme for a while too, especially if you're dealing with currencies. I mean, I can't tell you the number of times I've seen positioning in the euro super bearish as the euro's driving below $1 towards
very true.
In parity, and I've seen it, the opposite be extremely bullish, but the euro go from 120 to 140 to 150, so I try not to read too far into it, but the one thing that I know I've been thinking with the Aussie for quite some time is I do want to be a buyer down at 70 cents. Because I do think that this is a generational low, this low that we saw back here in the COVID spike. I've always wanted to play into some sort of weakness down into 70 cents. I'm wondering if, this toxic mix between, the Fed potentially tapering, stock market prices likely to come down from current levels, and as Ben put it, a systematic problem in China. We might have a situation where the Aussie dollar could probe into that 70 cent level in the coming weeks. I said, I'm sorry.
Get in the queue.
Yeah, I really would love to be long the Aussie. And maybe allow it for a bigger shakeout towards, like, I always thought the 38% retracement, which, by the way, the 38% retracement is at 70 cents or just above 70 cents. I always thought that was going to hold, but I'm looking at the price action, and you guys know, I've talked like in nauseum about the weakness of the Aussie over the last 6 months. If you listen here every day to the F.A.C.E webinar, I've talked about how poorly the Aussie dollar has been trading this year. Every day, I'm pretty much focused on this pair on the short side. But that move down here at 71 cents had me a little shaken that maybe we might have seen the low. But look at the price action. It just trades heavy. I mean, I wouldn't almost be surprised if we push below this, what I've been looking at as a support zone, and maybe even see, a move down toward the 50% retracement down at, 68, 67 cents. Just again, if you line up everything that's happening, you take equities at very, very elevated levels that look like we're going to continue to correct, at least near term. Some problems in China and a continued lockdown in Australia. Maybe the Aussie dollar 70 cents doesn't hold it. I don't know. It's something that I have no position in the Aussie right now. I do still believe what I said on the week ahead video this week, that in the event we get a dovish FOMC, which trying to get a hawkish Powell on a FOMC day is like, I don't know what it would be like. Dale, you can probably throw up some sort of funny analogy, but if they continue to be dovish, and it seems like maybe 2022, beginning of 2022 is when a taper actually might even start. Stocks could rally to all-time highs, and the Aussie could recover here. you know, but I still have to, I have to point out that the Aussie continues to trade like poop on a stick. Anyway, so I've been talking, and you guys, sometimes I'm like, is this thing even on?
Yeah, we're
okay, just making sure.
You're so used to being interrupted. It's uncomfortable.
I know it's uncomfortable when Steve doesn't jump in and and interrupt me here. I'm just kidding, Steve. But no, hey guys, any final thoughts before we turn it over to Dale before he goes into his interview today?
I agree that this China situation with the combination of Fed remaining dovish, and they will remain as dovish as circumstances allow, and the fact that I believe that the Chinese are going to get things in order, or at least make them appear in order, is going to make the dip in some of the commodities that have been selling off, as iron ore, for example, and subsequently to Aussie. It's going to make it a very good buy the dip opportunity. So I'm 100% with you, Blake.
All right. Well, hey, you know, Richard asks, is there another webinar before the FOMC? If you are a Forex Analytics subscriber, the daily roundup is always at I'm trying to think what time it is Eastern, because I know what time it is.
1:15.
It is at 1:15. I think it is 1:15. I'm trying to think. For me, it is at 9:30. No, so it's at 12. It's at 12:30. 12:30 Eastern. So yeah, 12:30 Eastern. So we'll see you guys there. If you guys are Forex Analytics, thanks everybody else that just popped in. I'm, you know, Dale always trying to say time zones from Arizona. As you know, we don't change our clocks, so it's always screwed up for me.
It's too complicated for you.
It's a very complicated situation for myself. So Ryan, Stelios, Steve, Dale, have a great, good luck to you guys. And for those of you,
everyone.
Yeah, for those of you not in the Forex Analytics community, good luck today. For those of you in the community, I'll see you in 45 minutes on the Morning Edge. But also, I need to mention our webinar sponsor. Make sure you visit Forest Park FX. They're like the concierge of brokers. So if they'll basically, you talk to them and they'll say, hey, what kind of trader are you? And they'll find the best solution for you. We've been working with them for years. I actually just started getting cashback rebates since I jumped off the JP Morgan platform and back into retail trading. It's kind of nice. So make sure you talk with them, try to figure out how you can get cashback trading or get Forex Analytics for free. Possibly you can contact them right here on Skype or email them right from here. And like I said, we've been working with them for about 5 years now. So they're a great outfit. And they are our sponsor. They're the reasons to make sure that this webinar continues to happen for you guys. All right. So thanks, everyone. Good luck today.
Good hunting, Blake. Team.
Cheers, guys. Trade
Thank
safe.
you,
Bye-bye.
team. Ryan, Steve, Stelios. Thank you, guys. Anas El Haji, welcome back to F.A.C.E. Gosh, we have so much to talk about today. Really an excellent time to have you here. I don't know where you want to start, Anas. How are you? Waiting to hear your voice.
All right.
There
Do you
we
hear me
are.
now? Okay.
Got you, buddy.
All right. Thank you. I would like to share a screen.
Okay, that's a green box there.
All right. Got it. Okay. I'm going to go to this one here. All right. There are a couple of themes from my speaking engagements with investors and board members, and they are in kind of highly demanded. So I'm going to talk briefly about them. There are two themes that are almost like the themes of every hour these days, aside from the European energy crisis.
Okay.
I am bullish on oil midterm and long term, which is surprising for a lot of people because we've seen many reports talking about major decline in demand. People are talking about 60 million instead of 100 million, etc. I think that's all not supported by any meaningful data or facts on the ground. And the first theme basically is how companies are reducing their carbon footprints to achieve their carbon neutrality goals. And this will have a tremendous impact on oil demand and natural gas demand. The reason why, because those companies and countries, I'm talking about governments, announced certain dates for their carbon neutrality, and mostly it's to 2040 or 2050. Mostly it's kind of rounded numbers, just like 40 or 50, and not a year earlier or a year after. The problem is those governments and those companies announced those dates without knowing how to do it, how they are going to pay for it, and who is going to pay for it. We don't have any, there is not.
So it's all just PR. It's all just PR bullshit.
Correct.
Right now. Okay.
To the extent that some governments ask the International Energy Agency, look, we announced our carbon neutrality date, but we don't know how to do it. Can you give us a kind of a plan? I mean, that's public. This is not even secret information. They did ask the International Energy Agency after they announced the date.
Okay,
So,
interesting.
how companies are reacting to this, and I'm talking about companies in general, not only the oil companies. There are, if you study all their behaviors, we can conclude that they have 5 policies. They adopt a combination of those policies. And the best way to make people memorize what I'm talking about is to use animals for each policy, like we see on the screen.
Okay.
So they can see the screen, right?
Yeah, they got it. They see the bunnies and the cow.
Correct.
Yeah.
So these are the 5 policies. I'm going to focus on some of them. Basically, let me start from the right, because this is the most interesting one. The one on the right, basically, those are the scavengers. And the scavengers, these are the companies that are saying, look, I cannot do much, but let's look at what we've been doing in recent years or in the last 4 decades that is green and can be considered green today. So companies that are in retail will say, look, I have all those skylights in my stores, and I can claim that toward my carbon neutrality.
And windows and solar on the office.
Correct.
Okay.
And then I have, my campus is so large and I have 2,000 trees, and now I'm going to claim that.
Yeah. Okay.
And because of COVID, I already cut 50% of my office space, and I'm going to count that. And because 50% of my workforce is working from home, I'm going to count their transportation.
Okay.
So those are the scavengers. What that means
Who's going to audit this stuff?
Correct. So that's another problem, because at the end, we are going to end up with another Enron.
Let me ask you this. They've been talking about it for a long time. You're bringing up the carbon footprint. Is there going to be a market in carbon credits, and is it going to be a whole new thing where people are trading these things? And they had planned to do it for years. Is it on the horizon now?
Well, it's already happening, but if you really look at what's happening now in this slide that I'm explaining, you will see how large it is going to happen, how large it is, and how corrupt it's going to be. Because if you go back to the bunnies, to the rabbits, those are the companies that are divesting.
Oh, they're running away.
They are running away. The problem with divestment is that they are just selling their assets to someone else.
Right.
So there is no carbon.
Right.
There is no reduction in carbons at all.
Right. Just risk. They're eliminating all the risks. They're passing on the problem.
For them, but they are giving their problem to someone else. And one of the problems is, if the good companies get rid of their assets and bad companies take it, or companies from overseas take it, then carbon footprint could be higher for the same assets
Right. Okay.
because they don't have the same environmental controls that we have.
Okay.
Then if you look at the bottom left where we have that deer, this is the low-hanging fruit. Everyone is going to go for the low-hanging fruit.
And what would that be?
What that means is they are going to do the little things, the easy ones, the less costly one, the one that they can really do without any problems. And that's going to, of course, getting rid of assets
Without
is one of them.
spending much money.
Correct. Scavengers is one of them.
Yeah.
Doing this little things like installing sensors or lighting in the buildings, some improvement in efficiency, buying kind of better air conditioning units that is more energy efficient, etc. They can do these things, but these are the low-hanging fruit. But the
Right.
top of the tree will stay there. So they cannot achieve that carbon neutrality anyway. And then on the right, basically, you have the FA.C.E. And this is kind of very interesting because we see companies adopting several of those policies together. And they are scavengers. At the same time, they are getting rid of assets. They are trying to do the low-hanging fruit. They are trying to do what, say, okay, I'm going to abide by the laws, but I'm not going to do more than that. And the end result is very fascinating because if you go to the carbon accounting and you look by how much companies reduce their carbon versus the actual reduction, you will see it's in multiples, probably thousands of times. Because companies that get rid of the assets are claiming that carbon.
Okay.
But the carbon was never reduced.
Okay.
So
we're this is a charade.
correct. So what's going to happen is, as a result, we are going to have a big carbon market for nothing. And this idea of climate change, we are going to continue with it even after those companies achieve their environmental goals. And the end result of that basically is this idea that demand for oil and gas is going to decline substantially, like they are saying, is not going to happen. The whole idea of carbon neutrality does not mean carbon reduction. It means I can increase my carbon footprint as long as I can compensate for it on the other side of the equation. That's what
Right.
carbon neutrality is. So the
Okay.
whole idea here is, if you look at the behavior of the companies, is we're not going to see that reduction in oil and natural gas. As you know, on previous shows, we talked about why all those forecasts and outlooks are wrong, and they are exaggerating the decline in demand. So this is just a new angle added to the discussion that carbon neutrality is going to end up an accounting game, and we are going to end up with Enron multiplied by thousands. The second
Okay.
point,
That's not going to be a good situation for people that depend on power, like everyone.
correct, it's going to be really a major problem. And if you look at the crisis that California
Europe.
suffered from,
Oh yeah, the brownouts.
and now in
Yeah.
Europe, this is going to continue. We're going to see it every year because it's a complete nonsense. If you really believe in climate change and you believe we are in trouble and we are going to have more hurricanes and more powerful hurricanes and more powerful tornadoes and more fires, if that's the case and we are going to have more floods, why you are depending more and more on energy sources that is a function of weather?
Interesting question. You mean like wind?
Wind and
And solar, yeah, you need to have, you need the
So
sun.
if you believe we are getting into that situation, then you got to be secured. And the only way it can be secured is to keep fossil fuel as backup, at least. Because we've seen in the UK, they went back to coal after they literally closed those plants. And that's another problem, because now we are going for this climate summit, and that's the COP26. and Europeans basically are trying to pressure the Africans to do whatever Europeans believe in, and telling them don't use coal and don't use oil and don't produce your oil. And Africans are looking at them and said, look, when you had power shortages, you went back to coal.
Yeah.
And you want me to get rid of it completely?
Yeah. And
Yeah.
I've heard the prices of coal has also skyrocketed.
Absolutely. Absolutely. And of course, you have China and India are going to say the same thing. But here is the most important, since time is limited, the most important point that I would like to mention for the short term, because what I mentioned earlier was kind of more medium to long term. This is
When do you think they'll start trading these carbon credits in us?
it's already being traded as we speak. It's already, they started this already.
There's an exchange. Where do they trade them?
They are trade. We have a market in Europe. If you check the carbon prices in Europe, they are at record high. And that's
Okay.
why we had problem when the UK switched back to coal, because the cost has to go up.
I see. Okay.
The other point that no one is paying attention to, and this is kind of dear to me because I did the field work in the past in several countries on this. Private generation. When you have power shortages, you end up with private generation.
People
And
getting
private generation,
generators.
correct. And private generation uses fuel oil and diesel. The problem with the private generation is, if it is on a large scale, as we've seen in the past, we don't know about it until after the fact, because there is no indications ahead of time to know about it. So I'm going to mention a couple of examples. For example, if the Chinese government decided to limit the amount of power available to factories and say you can work only 5 days, you cannot work 7 days, then factories are going to say, look, I have orders for the next 3 years, and I have to work 24/7, and I cannot afford to lose 2 days. So I'm going to bring a private generator, and I'm going to work those 2 days because the government is going to cut me off. But if thousands of factories do the same thing, all of a sudden we have an additional demand of diesel, for example, of 200 to 500,000 barrels a day that is no one is counting for. And we've seen that in the past. In other places, for example, where we've seen those high-rise buildings that's being built with the support of banks, on the idea that once you finish, you rent the apartments, you have enough cash flow on a monthly basis to make your monthly payments to the bank. But once we are done, there is no power for the buildings, and the banks are going to take over the buildings. So the owner, to avoid bankruptcy, what they do is they bring those private generators. I've seen it without naming names. I've seen it in some countries where they are going to the previous republics of the Soviet Union and to other countries like Romania, Czechoslovakia, and getting those old generators. Every generator is bigger than a bedroom, and shipping them to that country so they can power the building, so they can rent the apartments to get some cash flow until they get connected. And all of a sudden, diesel consumption went through the roof.
Okay, that's what powers all of them. It's all diesel.
Correct. And in this case,
Okay.
it's diesel. But
All
if
right.
you look at the cases like now where we have major power shortages, like in Lebanon, Venezuela, and now we are seeing it in China. We might end up, of course, you already seen it in California, and we had diesel generation in California. Even the federal government intervened and supplied them with private generators that run on diesel.
How about
So-
the UK?
And California. Well, the
Okay.
UK, we haven't heard. I think one of the issues in the UK is if power prices are transmitted to consumers, because most of them right now are carried by the power companies, because the wholesale prices that went up, not
times?
the retail.
Yeah. Okay.
But if the retail prices go up substantially, then we might see some companies saying, you know what, it's probably cheaper for me to burn diesel if the environmental laws allow that.
Okay.
So those are the 2 points that I would like to share with the audience today. Both of them have tremendous implications for the oil market, one for the short run and the other one for the medium and the long run.
And both being bullish.
Correct.
Okay, and I will attest to you've been constructive ever since I've been talking to you about the oil market. So let me ask you this: with winter coming to Europe and LNG and nat gas and everything that Europe and the UK uses for heating, are they going to have to turn to Russia for supplies? And are they going to be a reliable supplier for Europe this winter?
There are 2 ways to look at this. Of course, we are focusing only on gas and LNG here. For the oil market, I am not worried.
So
because
people don't have to wear their winter coats in their house.
Correct. Just a comment for the oil market. For the oil market, Saudis and their allies are going to add probably another 700 to 800,000 barrels a day by that time. So there is no problem with oil. But on the LNG and natural gas, if we take the conspiracy theory and say that the Russians basically organized that, it is most likely because they want to support the Nord Stream 2, and they want to support that pipeline and really force it and shove it in the face of everyone, if that's the conspiracy theory. However, there is something in the background being cooking, and I think that was missing from the media, and probably by design, that probably all those natural gas shortages that people are talking about was the result of the hype of all the renewable sources that the International Energy Agency and every European president or prime minister is talking about. Just scared the hell out of investors. We've seen it in the United States. We are seeing it around the world. So they are paying for the price of their hype. That's what it is. Now, we do have other sources. So yes, the crisis right now was caused by multiple sources, but one of those sources is the hype, because it led to a decline in investment.
A buying panic.
Correct. And so it's the hype of renewable energy that is part to blame. One of the issues we know about right now is that there was one day, I think it was on the 6th of September, when wind just stopped blowing in the UK.
Oh, that's when Boris Johnson went on a silent retreat.
And they ended up basically paying record prices to get a couple of natural gas plants to fire up. And it wasn't enough, and they had to pay 2 coal fire plants basically to start up, just to avoid power shortages. Now, if you look at it from an African point of view, which is very interesting, say, you know what, and I think there is kind of a valid point here, because they are saying for just to avoid inconvenience of the white man in Europe, they are willing to do whatever. And the idea of climate change becomes on the back burner when it comes to the inconvenience of the white man. So why they are forcing us to live a miserable life by lowering our consumption of oil and coal. And we are going to hear more of that in the coming months.
Okay.
The implication of that is this COP26 might end up with a failure. My column on Tuesday, basically, which I tweeted, people can translate it from Arabic easily. I listed 12 reasons why this meeting could fail. And the failure of this meeting will bring back all the negotiations of climate change back to zero. And the reason why, because India and China are more emboldened than ever right now. They are more powerful on the international stage than ever. The oil producing countries are playing the game of moderator, which is kind of very interesting, because the Europeans are on the far left, the Chinese the Australians and the Indians on the far right. And all of a sudden you have the oil producers in the middle who are trying to mediate, which means, and this is one of the ironies, that the success of COP26 could hinge on the mediation of the oil producers.
And we know what their interests are.
Absolutely.
Okay. What a great, I tell you what, every time you come here, you uncover a lot of the narratives that we talk about, and you cut through them and, you know, shed light on things like this whole, you know, carbon issue and private generation. You're really a great watchman in the energy sector, Anas. I
Thank
want
you.
to thank you for, you know, coming here, and it was also nice to see all the animals on the screen.
Absolutely. Absolutely.
Yeah, so, you know, thank you very much for, you know, talking about this, because we know everything is, you know, going to be, you could call it political, but it's all about money. So it's an interesting look at what this green movement and another accounting issue. There's going to be lots of games being played, and lifestyles suffer as a result of it. So
Absolutely. Absolutely.
thank you, my trading warrior brother, for coming back and sharing an interesting thing we're going to be hearing about it more and more as time goes on. And now we'll know that there are predators and scavengers and people that are companies that are just going to liquidate and pass the problems on. So
Correct. Correct.
okay, so
Thank
much
you.
appreciation for edifying F.A.C.E today, Anas. Thank you.
Thank you. Bye-bye.
All right, that's a wrap, everyone. Good luck with the Fed. I don't know what Anas thinks about the Fed. Maybe Jerome Powell is going to do his presser with his own generator. We'll see if that happens. Buddy, so anyway, everyone have good luck. Be careful. Don't try and play roulette. Try and trade. So that's a wrap. I'll see everyone tomorrow. Adios, and thank you, Anas El-Haji, again for another enlightening interview. Inshallah. Adios.